BNY Mellon says fund performance hurt by lack of exposure to Bitcoin stocks. Yes, Wall Street banking giant Bank of New York Mellon Corporation has said the performance of one of its exchange traded funds was considerably impacted by its lack of exposure to crypto stocks. We've been making fun of stockbrokers and other investment analysts for years on this show, but now it's finally come to pass. Josh Shigala, are these analysts in danger of losing their jobs if they don't understand and support Bitcoin and other cryptocurrencies?
The funny thing is, they'll lose their job either way, because what will happen is they'll eventually break when the market is at full-on hype up the top mode, and then the market will crash on them right after they buy in for all their clients, and then they'll be sweating, and hopefully they'll be okay. They won't top themselves or anything, because you don't want that. But it's gonna get weird, because right now this is the time when these big institutions are sweating like crazy because they're not exposed. And I'm seeing it on the ground by a few people. They're like, we've got to get exposure, but our mandate states that we're not allowed to be in exotic things. And this is getting less and less exotic. So they're kind of being able to say, well, it's not that exotic. Come on. But yeah, the problem is exactly what I said. Once it reaches that all-time fever pitch, that's when they're going to jump in. And people talk about the smart money, and they've talked about it a long time. And me being in startups for a very long time, I always assumed that VCs were the smart money, but they're not. They're just like the retailers. They'll throw money at every crypto startup during these bull runs, and then when the bear market comes in, they're like, oh, no, Bitcoin's over. The crypto is finished. It's not that interesting anymore. The XRP is interesting, or whatever. But during the bull cycles, just like the retailers, these so-called smart money are also FOMOing at the mouth. So I really look, people out there in Stockland, heed my advice. Either get in some now or wait a little bit, because you're gonna get your fingers burnt. And if you do, don't sell. Just hold on to it, and you'll be right. You'll be right, mate. Hey.
Reminds me of something from Hudsucker Proxy. Who's the most liquid man on the street? Wearing Hudsucker. What do you call a sidewalk when it's fully dressed? It's wearing Hudsucker. Ben Ark, your thoughts on BNY Mellon and the future of financial advisors?
Distracted me now with the Hudsucker Proxy. Is a great film, for the kids.
137 floors, not counting the mezzanine.
Yeah. Where were we? Oh yeah, no. MicroStrategy's gains 400% this year, I thought was pretty impressive. Or not this year, since they bought their Bitcoin. But yeah, I mean, like, crikey, money people, they love things like gold, rare art, Bitcoin, so it very much appeals to them. And they are worried about all the inflation stuff. So they should be buying Bitcoin, or they should hold a certain amount. Oh, there we are. Did I get something nice? They should hold a certain amount of their assets in Bitcoin, but just a small amount, 5% is what you need. But have we got a story later on about Elon? And are we doing Elon? We covering Elon? No. Okay, so we talk about Elon now without spoilers. Okay, so obviously Elon sold 10%, and then Bitcoin has got all angry. Like, why, in this free market, are you buying something then selling it for more money? It's ridiculous. You shouldn't do that. But yeah, so, but he said he was testing the liquidity of the market, which then tanked a little bit. So, I'm sure his experiment got some interesting data, but he made a shitload of money, and he's still got he's up like $1 billion or something on his Bitcoin investment. But yeah, all these other people are going to get encouraged to join in when they see the mad gains their rich mates are making, when they're all like in their lizard form as a cabal, sacrificing something, probably, small human or something. And then they're all like, oh, I made this much money from Bitcoin this year. Then the other ones will be like, I need this much. I need that money too. I need those fat gains. So they'll be piling in. It's just a matter of time.
Travis, Urig, is it time to replace all financial advisors with two short and simple words? Buy Bitcoin.
Be a good start. The story Ben mentioned as well, and that was Tesla putting it on their asset book, right? They're adding to their treasury, and you'll see more of that. MicroStrategy obviously is the really crazy example where they're all in, but just the idea of having a little bit on next to your cash reserves, next to your other assets, just to spread things around a little bit. You're going to see more and more of that. The best time to buy Bitcoin is when no one's talking about Bitcoin, right? And if you, barring that, the best time to buy is a little bit every day. So you're kind of spreading out your risk. And I really love what I said earlier about how when things get really top, really hypey, that's when these institutions are going to break. That's when they're going to start buying. And that's going to be a terrible time for them to do it. You have this the whole market around these hype cycles, and they're just going to add to it. I think also it's important to remember is these financial institutions, they're not dumb people. They get involved in really weird, exotic financial instruments all the time. They buy, tranches of mortgages, and they do all these really obscure, exotic assets. So you think they definitely are capable of understanding this. And it's more around rules from the institution to not touch this new thing. And every day it becomes less of that new thing and less of something that they're learning about, they're reading about, they're understanding.
Dan, Eve, stocks, bonds, and Bitcoin?
That's a really good point, actually, you made, Travis, about the fact that these exotic instruments, and let's not forget. I mean, obviously, it can't be fully blamed on it, but credit default swaps, that played a bit of a part in the last little of the global markets in 2002, 2008, 2007, 2008. So they must, they are aware of the risks, and the actuaries, they take risk into account. So surely they're looking at Bitcoin and kind of going, it's kind of up for like 90-80% of the time in terms of price. Like 98% of the time you could have bought Bitcoin before, like now you'd have been in profit or whatever. But it's the BNY sounds a bit depressing. Like, oh, kind of missed the boat. We had gold stocks, and they didn't do so well because of the weak gold prices. But Bitcoin did really good, and we kind of missed out on the exposure to that. We could have had MicroStrategy, we didn't. And like the whole article just seems a bit kind of like they're depressed about it. But it sounds like they're going in hard with custody services, which is what some of the banks are seeming to do. So they digital assets unit, and they invested in Fireblocks as well. But ultimately, all the naysayers about Bitcoin, they're itching under their skin to get exposure. And if they don't do it soon, the exposure they're going to get isn't going to be to Bitcoin. It will just look like a flasher in the park, and that's not good. So but get involved in Bitcoin now. Obviously, a small percentage that's risk evaluated. But also going back to Elon, the very good point about testing liquidity, like the fact that he's proving that that they bought a shed load of Bitcoin, and being able to sell 10% of it proves how liquid it is. And every year I knew about Bitcoin that I'd be speaking to people about, they'd say, why would you buy this crazy Bitcoin thing that's totally illiquid? Why don't you put money in a house? Well, the only flat I ever sold took me bloody ages to sell, and it's definitely not liquid, especially in UK markets, whereas Bitcoin could be sold instantly. So it is completely liquid, and it is it's a free market, as Ben said as well. It's a good show that and so much so they sold 10%, and it didn't impact the markets or wasn't visible. It wasn't like, oh my god, it completely it killed the markets in the background. It was only people knew about it once the news came out. And that shows how liquid it is. It didn't just kill everything. So apart from people, suddenly going, oh, Elon sold 10% or whatever, but he's still got his 0.25 Bitcoin. That's all.
Yeah, but also what I'd like to add to that is that this is a global company. They hold a lot of different currencies on their balance sheet, and it's a constant balancing act that the CFOs are making between different currencies. Now, when I go to the US, I use US dollars. When I go to the UK, I use British pounds. When I'm in Berlin, I use euro. And when I'm on the internet, I use Bitcoin. And they're starting, when you sell cars over the internet, you should use the native internet currency of that place. And if you hold too much of one currency, you need to constantly rebalance. That's just part of their business. And so by him testing out the liquidity, this is or him, I should, the company, it's all about rebalancing those different exposure levels of different currencies, and that's all. And this is a great thing because it means that as they move forward, accepting Bitcoin for their cars and all sorts, they can keep rebalancing their sheets, moving risk around, and dealing with different financial markets and their risk profiles.
The nice